Welcome, traders, to another Tickmill trading update with me, Patrick Munnelly. Want to update the S&P 500 view using the emini futures contract and wrap up the week here and put together a trade plan for Friday's session. In terms of the macro side of things, we've got a fairly light calendar today. We had some Fed speaker, overnight, which has once again seemed to soothe the market concerns that we've had this week with respect to uh, recession risk and the potential for the Fed to make at one point this week we were talking about an intermeeting move in terms of rates, but that's off the table for now. And the focus is going to start to shift into next week with CPI and retail sales going to provide key inputs really as to the next move with respect to the market's view regarding the US recession risk. We also want to keep an eye on the dollar yen, which was also in the mix with respect to catalysts from the macro side of things for the whipsaw of a week that we've experienced here in the market. So moving into the charts, I just want to start with the weekly here. I'm just going to see if I can blow this up. That's the daily. 1 second. So I want to highlight. I talked about this earlier in the week, but this market symmetry that I'm tracking. You can see here in this last significant sell-off that we had back in January 2022. You can see kind of the similarities that are building here now. We had an initial 3-week decline, and then we put in a pin bar, which still, although obviously a technical reversal signal, it's noteworthy that on the 5-period volume weighted average price look back, this was still classified as bearish price action. And so we could see, or we're starting to potentially put in a similar pattern here. So we could trade higher into next week, and maybe it could be the CPI coming in a little bit hotter than anticipated, or retail sales surprising. That could be the next catalyst for another through the downside. It doesn't appear at this stage that we're completely out of the woods yet, and we do have event risk coming up into next week. And then after that, the market focus will shift to Jackson Hole and Fed Powell's speech there into the end of August. So there's still significant event risk. We still have an elevated VIX. The VIX is up, still trading at a 23 handle at the moment. So the markets, whilst having recovered, are certainly not completely stable at this stage, and I can't, to my mind anyway, discount another move to the downside at this point. Certainly, whilst we're trading below some technical levels that I'm going to talk about in a minute. But I just wanted to highlight this symmetry in terms of the setup that we're on, or the path that we're on the weekly time frame, and what we could expect to play out in coming weeks. So we'll just park that for now, but certainly, like I say, something to keep in mind. Similarities we're seeing here in terms of the technical setup with the sell-off we saw in 2022. So moving to the daily time frame, yesterday's move flipped the daily volume weighted average price bullish, and now, to my mind, we are targeting a move up into the 54.20 to 54.50 area as a key test for bulls here. From a technical perspective, whilst we trade in this downtrend channel, sorry. So whilst we're below 55.50, I think at this stage we can only talk about this as a correction for now. We certainly want to see a couple of closes back through 55.30, 55.50 to suggest that we're out of the woods, and maybe we're going to retest prior cycle highs. So moving to today's setup, you see my positions here. This dollar move, we had a strong response yesterday from the dollar with that claims data, but then overnight we've had candidate Trump out talking about if he is nominated again and wins the elections, that he would actually look at having some input into rate decisions in the US, and knowing his view on dollar strength and his hopes for dollar weakness, that's weighed on the dollar a bit overnight. And so we're seeing a bit of a pullback there. I'm going to keep a close eye on this into the close. I don't want to see a move back through 102.50 really. That's where I'm going to bring my stop up to, and we'll see if that holds. Other positions are all risk free now. I did longs yesterday to the 52.86. Added through added through the break of the daily bull bear zone yesterday. So highlighted this in the chat. In yesterday's analysis, and I'm trading the break higher, and I'm holding risk-free longs from 52.86 and 52.31 at this juncture. So in terms of the technical targets now, I'm actually looking, let's just remove these scenarios and pull together some levels for today. So the bull bear zone for me today is going to be this 53.20 to 53.10 as this area acts as support. I'm anticipating we target an equality objective, and I'll just draw this in for you guys. So we have this swing structure in place. So you can see that 54.18 is the equality objective here. I'm anticipating a bit of resistance into the 53.80s, 53.90s on the first test. But then as this 53.60 area continues to act as support, I'm looking for us to target a move into the equality objective at the 54.18. And then we have that pivotal 54.30 area. So this was the target zone for the week in terms of if we held the support, which we did. And so I'm looking for us to test now into this 54.20, 54.30. And I'm going to probably close out some longs there and look at the potential then to get into a short position to play for a pullback. Certainly to take another look at the 53.60 level from above. So that's going to be the key target on the upside for me today. Now, if we don't see sufficient supply coming to the market there, or intraday divergences, then the obvious target is going to be our trend channel resistance as high as 55.30, 55.20 on the upside. My sense is we don't really have sufficient macro catalyst to see an outsized move today, because that would be a pretty much a range extension. Currently, the range I'm looking at for the day is 54.85 on the top side, 52.22 on the downside. So that's why I have this 54.80, 54.90 pegged as potential resistance here, as that would classify 100% of the expected range heading into this afternoon. So any extension up into the 54.20 to 54.30 again would be a range extension. That's where I'd be looking for some profit taking at a minimum to kick in. And I think that pretty much wraps things up for the week. So the bias is bullish above this 53.20, 53.10. We had to take that out on an intraday basis for the current bias to shift to the bear side. Now, if that was the case, then the downside target in terms of range will be a move into the 52.20s on the downside. So Let me just update that. So I'd be looking 52.25. Actually, a little bit higher with that volume node there. So 52.30 to 53 to 52.20 on the downside. If we take out the 53.10 as support, possible, less probable to my mind at this stage. But we'll see how the session develops. And I'm back in the trader chat now after some technical issues. So I'll provide any real-time updates through the Tickmill trader chat in the Facebook group. As always, traders, plan the trade the plan, and most importantly, manage your risk. Until next time, thanks very much.